I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target. But that means we have to go through a big rally and then a correction of some sort. And then, of course, it's going to go higher. So that's where I think you can make really, really big money, because it's going to last for many years, and we're going to see gold go up another 100, 200, 300%. Silver will probably go ballistic as well.
Gold prices are ending 2025 in rare territory, near record highs, up roughly 2/3 year to date, and with Wall Street forecasts increasingly clustering around the $4,500 to $5,000 zone for 2026. That near-term pause masks a bigger story. Gold is being pulled between a firmer US dollar and higher yields on one side, and rate cut expectations, central bank demand, and persistent geopolitical uncertainty on the other, an unusually supportive mix that has kept pullbacks shallow in late December trading. Chris Vermeulen of the Technical Traders joins to break down what the charts are signaling as markets head towards year-end and into 2026. He believes the chart structure is very healthy. After a strong rally followed by a meaningful correction, Chris believes gold could eventually move towards $7,400 to $7,500 per ounce. In his view, the path higher won't be smooth, but the long-term trend remains firmly intact. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
Yeah, gold is like just trying to break through this kind of euphoric little peak that we had back over here. The chart is pointing to about $5,100, $5,200 per ounce. So if we were to just forecast that forward here, you can see we've got a pretty nice move to $5,100 and about $75 percentage wise from where gold is right now. It's about 18.5% to the upside. So it's really exciting. Generally, when there's big moves, big changes in sentiment, like the banks now saying and advisors saying, "Oh, get gold." Usually, we're on the last stretch of that asset. They're usually the last to kind of get on board, the last people to try and push it. A lot of advisors don't really want to do much in gold because sometimes there aren't commissions or ways to earn money in it. But you gotta just be aware. I think when everybody starts saying move into precious metals, it's usually kind of most of the move has already been done. I mean, just look at the chart of gold. If we were to just squish this down, gold has had a massive move for the last several years to the upside. Mm-hmm. And now people all of a sudden, want to get into gold now. I mean, it's great for a trade, but as a long-term investor, I think you're gonna have to weather a storm. I think we're gonna see some pretty big volatility over the next year or so in the markets. And I think gold could be back where it is now. It could actually be $1,000 lower than it is right now, looking forward 12 months. I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target. But that means we have to go through a big rally and then a correction of some sort. And then, of course, it's going to go higher. So
silver has experienced a remarkable bull market. The more than 110% year-to-date gain represents a dramatic turnaround for the precious metal, long regarded as the poorer cousin of gold, whose price typically outpaces silver during bull markets. Although some investors are warning of a potential short-term price correction, sentiment around silver remains bullish for next year. Before 2025, silver had spent much of the past decade in the $15 to $25 range, with occasional spikes above $30 during periods of investor enthusiasm. But it struggled to sustain upward momentum. Chris believes silver can continue to rally. He thinks prices could move into the $71 to $72 range, and during a final surge, silver might even spike toward the $80 level, likely around the same time gold reaches its own peak. But he also emphasizes that sharp rallies are usually followed by sharp pullbacks. Now let's redirect our attention to the video again.
Big move. Silver has already broken out of this pause right here. Gold is kind of stuck trying to break out, but silver's already extended. It's already moved to the upside. It's breaking out again. Our target on here was about 68 and change, which we're probably going to hit that in the next day or two. And then we can recalibrate what happens from that level. But overall, silver's on fire. And this is one of those other signs that's telling us we're a little bit later in the mature rally phase in precious metals. Is gold has moved up very nicely for many years. Now everyone is piling into miners, silver, platinum, and palladium. When we see the volumes pick up in all of those, and pretty much any stock that has the word mining in it, could be copper miners, could be base metal miners. This is usually what happens near the later edge. Later stages of a rally, they say, okay, forget the boring thing that's worked really well in the past, gold. Now I want to move into silver. I want to move into miners, things that move faster, and that's what we're seeing. And so that's why we're seeing silver break out. It's a tiny market. There's a bunch of people wanting to get in and take advantage of it, and they're all moving to the fastest moving metal or stock. And that's that's why silver is leading, I think, right now. And it's a good thing. I think silver's still going to rally. I think it could rally to 71, 72, maybe even into the $80 mark as it peaks out, probably with gold at roughly the same time. Wherever silver tops out, we could grab a couple levels. So depending on how we want to go, if we take this kind of low right across this level here, and wherever silver peaks out, say it peaks out at 68, somewhere in here. Well, I think it's going to go to around 72. I think that's kind of where it could blow up and kind of shoot higher to maybe into the 80s. But let's just say 72. There's a natural pullback level around the 38% retracement to a 50% retracement. So we could see silver pull back to $50 or $43 an ounce. It obviously would be a substantial pullback. If we take a look percentage-wise, that could be, a 30, 40% pullback. And that's pretty normal for a move. I mean, a 38% retracement is very conservative. It's actually a very bullish pullback. If you pull back to that level and then it starts to build a base and starts to move higher, that is a very strong symbol. If it moves to 50% pullback, it usually is going to struggle a little bit, take a lot longer to get back up to all-time highs. And if it pulls all the way down to the 618, a lot of damage is done, because based on the Fibonacci theory, if you come down to the 618, the first measured move target ends up being right at the previous high. So you end up putting in a bit of a double top. So I do think once, we've broken through that $50 mark, now we're going to see silver have a blow off top wherever it tops, in the 70s and the 80s over the next month or two. But then I think it's going to be stuck probably above the $50 mark. We've been stuck under the $50 mark forever. When we go back and look at historical price action, you can see here we've been, let's rescale this, we've come up to that 50 mark, or close to the 50 mark a couple times. It's sold back. I think now we're going to be stuck above the 50 mark, above these previous highs, or above like the 44 level. So I think silver's hitting a new pocket of price to stay in and hold up.
In the 19th century, many nations, including the United States and the United Kingdom, anchored their currencies to both gold and silver under bimetallic systems. Britain's pound sterling literally took its name from a pound of silver, underscoring silver's importance in everyday money. During the 20th century, governments abandoned silver standards, gradually stripping silver of its monetary role. Gold, however, remained in central bank reserves and continued to serve as the ultimate monetary anchor, while silver was pushed primarily into industrial use. As confidence in fiat currencies weakens and global debt continues to rise, could both gold and silver re-emerge together as monetary anchors in the next financial reset? Feel free to share your views in the comments. If this video was helpful, leave a like and subscribe to stay connected. We appreciate you being here.